Dirty dealings, corporate battles, consumer wars. This is Evening 5. Economy Minister Rafizi says negotiations for the Johor-Singapore Special Economic Zone, that's JS-SEZ, are in their final stages, paving the way for a joint agreement which is expected to be signed in September this year. The joint agreement will outline the commitment in priority sectors, infrastructure development plans and incentives for investors, particularly private equity and venture capital. According to a Bernama report, Rafizi hopes that the fiscal incentives for the JS-SEZ can be incorporated into the Budget 2025 announcement in October this year. The minister stressed Malaysia's eagerness to welcome investors capable of establishing an ecosystem that is high-tech driven and fosters high-value industries. He is also optimistic that the proposed cross-border zone can become a springboard into the ASEAN market. Malaysia and Singapore inked a Memorandum of Understanding on the JS-SEZ in January this year. The proposed zone could span 3,505 square kilometres, 4 times the size of Singapore, and include 16 economic sectors from electrical and electronics to agricultural technology. It is aimed at creating up to 100,000 quality and high-paying jobs and raising monthly household incomes to 13,000 ringgit. The 6 MPs who were stripped of their Bersatu membership have managed to retain their seats. Bersatu President Tan Sri Muhyiddin Yassin told a press conference that this was conveyed in a letter dated July 9th from Dewan Rakyat Speaker Tan Sri Johari Abdul. The 6 federal lawmakers are Bukit Gantang MP, Datuk Syed Abu Hussein Hafiz Syed Abdul Fasal, Jeli MP Zahari Kecik, Gua Musang MP Muhammad Azizi Abu Naim, Kuala Kangsar MP Datuk Iskandar Zulkarnain Abdul Khalid, Tanjung Karang MP Datuk Zulkapri Hanafi and Labuan MP Suhaili Abdul Rahman. They were sacked by Bersatu after openly pledging support to Prime Minister Datuk Sri Anwar Ibrahim and the unity government. Muhyiddin said that in the case of Suhaili, Johari had given a weak excuse for not vacating the seat, citing the Labuan MP's court case against Bersatu. For the other 5 MPs, Muhyiddin did not specify the Speaker's reason for retaining them, merely stating that the decision was based on shallow excuses and a flawed interpretation. He said the decision violates anti-hopping provisions, adding that Bersatu will engage legal experts to challenge the outcome. Human Resource Development Corporation or HRD Corp has acquired Widad Group shares, which tanked from 62 cent to 6 cent under a put and call option arrangement. According to the National Audit Department, the agency initially acquired Widad shares under the arrangement on October 15, 2020, when the entry price was 62 cent per share. The put options are exercisable during the period of 30 days after the 1-year anniversary of the company's purchase, while the call options are exercisable anytime for 1 year. Executed alongside the initial share sale agreement, the arrangement, which included a moratorium, was renewed on October 12, 2021 and extended until November 30, 2022. Complications arose when HRD Corp's Investments Panel Committee rejected a proposal for a second renewal of the agreement, citing Widad's failure to pay the agreed premium on the investment. Widad appealed on February 8, 2023, agreeing to HRD Corp buying additional shares at no charge to average down the cost while committing to premium payments via installments. The Investments Panel Committee then approved the second renewal of the agreement, extending it to November 30, 2023. Subsequently, the Minister of Finance approved a renewal, which was formalized on November 30, 2023, setting a renewal price of 54 cent, down from the initial entry cost of 62 cent. However, on January 18, 2024, Widad's stock plunged from 49 cent to 26 cent for no apparent reason. In April, Widad asked HRD Corp to extend the deadline to settle the outstanding amounts from their agreement to September 30, 2024, leaving the government agency in a precarious position. A research house warns a merger between MISC and Bumi Armada may be too difficult to pull off, flagging potential stakeholder resistance and a lack of financial synergy. UOB Kay Hian advised investors to continue buying MISC as the stock is still undervalued and take profit on Bumi Armada following the recent gain in its share price. It also raised concerns over Bumi Armada over a lingering payment dispute for the Armada Sterling 5 vessel. UOB Kay Hian said, while there are complementary areas and synergies, the stumbling blocks for such a merger are too great. The Edge Malaysia Weekly had reported that MISC is in talks with Bumi Armada shareholders to acquire a substantial stake in the company in a move that could create an entity rivaling Japan's Modec Inc. that now owns the most floating production, storage and offloading FPSO vessels. UOB Kay Hian also noted that a merger that only involves the FPSO divisions of both companies could see resistance from India's Shapoorji Pallonji Energy, a key partner of Bumi Armada's FPSO venture since 2014 and now a competitor to both MISC and Bumi Armada. Additionally, Bumi Armada's Caspian Sea subsea vessels remain loss-making, making it a key drag for any potential acquirer. The Kuala Lumpur High Court allowed an application by UEM and Singapore-based Genisys Integrated Engineers to remove two liquidators of their former subsidiary company UEM Genisys, namely On Kian Ho and Mok Yuen Lok. Judge Ahmad Murad Abdul Aziz also dismissed On and Mok's oral application for a stay of the decision, pending their prospective appeal against this decision to the Court of Appeal. Ahmad Murad also approved the appointment of Tan Peng Sam as the new liquidator replacing the two. He ordered On and Mok to pay 20,000 ringgit in costs. The two companies had sought to remove the liquidators as they had negligently lost 15.681 million ringgit held on behalf of the company between 2015 and 2023. On and Mok was said to have only discovered the losses last September and lodged a police report the next month. The two men also came up with the sum they lost only in January this year, but the two companies, which are the contributories, felt that there could have been more, as the sum did not include interest, which the firms expect to amount to more than 2 million ringgit.